Welcome to today's edition of The Good, the Bad and the Ugly, especially curated from the world of economy and business today. Let's start with the good. The banking regulator RBI requires all bank promoters to reduce their equity holding in the banks to 20% for diversified ownership of the banks. But Uday Kotak's proposal to reduce his share from 30% to 20% in Kotak Bank through non-convertible but perpetual non-cumulative preference shares has been rejected by RBI. Kotak Bank had issued 1 billion units of PNCPS to domestic institutional investors and companies. However, even though it met the letter of the law, it did not meet the spirit of the law because it did not result in effective dilution of control to the extent of 10% in Kotak Bank. RBI's vigilance on this as well as a firm stand is good because other promoters may have followed the lead of Uday Kotak and may have reduced their stake without effectively reducing control over their banks. Now let's move to the bad. India's trade deficit has hit a 5-year high of $18 billion in July. In June, it was $16.5 billion. This is largely happening because of oil imports due to increase in crude prices. Just the import bill for oil grew by 57% in July as against overall import bill growing at 29% only. Exports on the contrary have grown at only 14% and this is widening the trade deficit. India has got caught up in the US sanctions against Iran, and now that Saudi Arabia has also reduced its production of crude oil, the oil situation and the global pricing of crude may worsen even further. Unless India's exports grow very substantially in the coming months, the trade deficit is going to widen even more. This will make the rupee slide even further, may raise domestic inflation, which may force the monetary policy tightening from the RBI. As a result, there will be higher interest rates. All of that are bad scenarios as far as India's economy is concerned because they will tend to slow down the economy. And now let's move to the ugly. The gross non-performing assets in the banking sector have now crossed 10.3 lakh crore at the end of fiscal 17-18. They were at 8 lakh crore in the previous fiscal. The gross non-performing assets now account for over 11% of all loans disbursed by the banks in India. This was at 8% in the previous fiscal. These are alarming numbers for the banking sector and a grave economic situation. And so the Reserve Bank has put another 200 large accounts on scrutiny. These include Videocon as well as Jindal Steel and Power. These new accounts were identified after the bank's annual asset quality review. In the past, banks have been known to underreport their non-performing assets. Thus, last year the underreporting was to the extent of 40,000 crore. And so the RBI has issued new norms under which an asset is supposed to be called a non-performing asset if it remains unpaid beyond the 90th day. Since a vast majority of these additional 2.3 lakh crore worth of non-performing assets are owned by the public sector banks, the very fact that eventually it's the honest taxpayer who will bear the burden of it is what makes this ugly. If you enjoyed watching the GBU, please subscribe to the Business Today YouTube channel by clicking on the bell icon and also like us on Facebook. Our Facebook page www.facebook.com/businesstoday. Follow Business Today on Twitter India at BT_India and subscribe to our YouTube channel Business Today India.